They're continuing to do it. And even the World Gold Council said that 75% of the central banks they surveyed say they're going to keep buying gold in the next 5 years. I think definitely the wealthier part of the public, the high net worth individuals, the top 1%, they're realizing that, yeah, inflation is a policy and that you need to have some gold. So I think those are the main drivers. Yeah, the public are just starting to get involved, but there's still a long way to go. I think, especially in the West, maybe in Asia, the public has more interest in gold.
Mario Innecco observes that countries within the Global South and BRICS alliance are steadily increasing their gold reserves, representing the strongest wave of accumulation seen since the post-World War II era. He points out that this surge reflects a growing distrust in fiat currencies and a global move to safeguard against economic uncertainty. The World Gold Council supports this view, revealing that around 75% of central banks intend to continue purchasing gold over the next 5 years. Innecco further explains that the world's wealthiest investors, the top 1%, are also seeking refuge in gold, understanding that inflation is now a strategic outcome of policy rather than a temporary problem. The Council projects that total official gold buying could reach 750 to 900 tons this year, showing a clear shift away from reliance on the US dollar. Despite this rising demand, Mario Innecco stresses that while Asian markets remain highly active in gold accumulation, in public engagement, in the West still lags behind. He believes this gap presents a major opportunity for future investment growth, as awareness of gold's long-term security continues to spread globally. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates.
Gold is a neutral asset that you can keep at home, and I think that's driven gold. And you will probably have seen that since 2022, we've had record net buying of gold by mostly Global South and BRICS, non-Western central bank. Yeah, the most since the post-war World War II period, and they're continuing to do it. And even the World Gold Council said that 75% of the central banks they surveyed say they're going to keep buying gold in the next 5 years. And now I think as well, the public is starting to slowly get involved. I think definitely the wealthier part of the public, the high net worth individuals, the top 1%, they're realizing that, yeah, inflation is a policy and that you need to have some gold. So I think those are the main drivers. Yeah, the public are just starting to get involved, but there's still a long way to go. I think, especially in the West, maybe in Asia, the public has more interest in gold. Well, silver is slightly different than gold because it's not just a monetary metal. It's also an industrial metal. Why get involved in silver? Well, I think first of all, if you hold a silver coin, it's really nice. And you can invest as well in numismatics, which is collector's coins, history. But also silver has so many industrial uses. And I think India and China are using a lot of silver. And the fact that we're still around the price that it was in 1980. Recently, we broke above 50. We went to like 54. So while gold in 1980 was at 887, that was the high. Yes, silver is still lagging, so there's still a lot of potential for silver. And I think recently as well, I saw that the central bank or the Saudi Monetary Authority, they bought some silver ETFs, the SLV. Some people will argue, well, that's paper, but seeing that they're a big financial institution, they could take delivery of that. And I see that India as well is pushing silver, not just gold, as collateral for bank loans. They came out a couple of months ago with that. So it's becoming ever more important. And for China as well, it's really important. A lot of physical demand for silver. And yeah, I mean, the monetary part, you look back at history or you look back at or you look at, excuse me, at words like dollar. Well, that came from the Joachim's Thaler, which was a silver coin. you look at in Spanish the word for money, plata, that's silver. So I think it's in the human psyche as well. And if silver continues to go higher, which I think will, it will wake up the public to it. It's kind of in our DNA. So that's why I think, well, the other reason, Vladislav, is because gold is becoming less and less affordable, but silver is still only about $50, so still relatively cheap. If you, like you said, you strip out the sectors, it's mainly technology that's driving everything. But the other thing I would say, we are in unprecedented monetary age, I think, and measuring value in the stock market and other, let's say, investment places is really difficult because it's like saying I'm going to measure value versus confetti or something. So I think that's why I always go back to gold and silver. If you measure value in terms of gold, you'll see that the stock market hasn't really been doing that well. In the last 6 months or so, especially after gold started going up. And even longer term, if you go back to 1999, 2000, the Dow Gold ratio has been in decline. So the other thing I think could be happening is that yeah, valuations don't matter right now because the market knows that if something wrong happens in the system, maybe regional banking problems that we saw last week, for example, that the Fed will step in. And provide massive amounts of liquidity via QE or whatever other instruments they have. So yeah, it's almost like a melt up. It's almost like looking at countries like Zimbabwe, Venezuela, and Brazil when they had massive inflation. Their stock market actually did really well, but eventually people realized that the currency that those markets were valued at were becoming worthless. So that's how I see valuation for the U.S. stock market.
Mario Innecco highlights gold as a neutral, timeless store of value, trusted by both individuals and nations amid global uncertainty. Since 2022, BRICS and non-Western central banks have accelerated gold purchases, signaling a shift away from Western monetary dominance. With 75% of central banks planning continued accumulation, gold's role as a hedge against inflation and currency erosion grows stronger. Meanwhile, silver, though more volatile, offers greater upside potential, bridging its dual identity as both an industrial and monetary metal. According to Innecco, rising demand from India and China, coupled with policy moves like India's use of silver as loan collateral, reflects its increasing relevance. Despite market volatility, silver's historical and cultural connection to money, alongside gold's enduring strength, continues to attract investors seeking tangible protection in an era of devalued fiat currencies.
Some people argue that the miners, even though they've gone up a lot, yeah, they corrected recently. Despite that, some people argue that they're still undervalued because gold has gone up even more, and most analysts and investors they take the trailing average gold price. So they're still looking at gold at, 2.5, 3,000 instead of four. So I think we've got some earnings results coming out on the 23rd of October from Newmont, and I think that was to watch. So no, I don't think even though the GDX and GDXJ have gone up a lot, that we're over in this bull market for mine. And eventually, I think next year people are going to realize that because they're going to see all the great earnings for the mining companies. And despite the fact that gold is, some people say it's in a bubble, I don't think it is, but it's gone up quite a lot. And silver, it's still under-owned. Like very few investors own gold, and so there's still a lot of room in that sense. I think percentage of all investment assets in gold the mining sector in the US is around 1% or maybe even less, and apparently 39% of fund managers have no gold for their clients. Well, I think we're already seeing it in London in the LBMA. Yes, there's a shortage. Yeah, there isn't enough silver for all the paper claims that the bullion banks and others created. So, and I think the rest of the world, they want real physical silver. They don't just want to speculate on the price with paper. So yeah, it's definitely a possibility. We definitely squeezed recently up to like 54 in the spot price, and the spot price LBMA price has been higher than the futures price in New York. Yes, of course. Now we traded back below 50. I think we're just above 48 as we speak here. But I think that's just a retest of that massive resistance we've had since 1980. And I think eventually, yes, silver is going to fly. So there will be a big squeeze. We've had 5 years of production deficits in silver as well. So I think that's going to make things even more interesting. I mean, recently, I think it was overvalued last week or beginning of, yeah, I think it was last Friday. I said the gold price has gone up so quickly that I've lost track of it. It went from 4,000 to 4,400 almost in a few days. So we have seen a correction. But just because it gets overvalued doesn't mean to say I'm gonna like get rid of my physical gold, silver. I might take a little bit of profit in the miners, but I think I look at gold and silver as insurance and also as savings. And I think there will be a time that you will want to, if you need to, exchange gold and silver for assets that you think are relatively cheap to gold and silver. The other factor is confidence in the powers that be, in central banks and government. As long as governments continue to borrow and spend as much as they do, as long as they continue to wage conflicts around the world, and conflicts and wars are very inflationary. As long as they push for that, we're seeing this in the EU. We're seeing the United States as well. Even though Trump says he's a peace president, he's trying to provoke countries like Venezuela, Iran, in my opinion. And as long as also central banks are always willing to save the day, I'm gonna hold on to my gold and silver. But if that changes, and that's highly unlikely, then maybe I'll think of taking my gold and investing. Maybe, well, even though, yeah, I don't see myself doing that, but investing in government bonds, but I don't really trust them. So that's how I see that. That's how I see that question. That one ratio that's really important is the Dow gold ratio. And if you look back like 100 years, in 1929, that ratio topped around 20. You needed 20 ounces for 1 Dow. And then it bottomed at 2 in 1932. So that was a good time to get out of your gold and get back into the stock market. And then from then on until 1966, that ratio increased again to 26, and then it dropped to 1 in 1980. That was a great time to get out of gold into financial or paper assets or the stock market. And yeah, 1999, 2000, that was the top of the Dow Gold ratio. After 1980, it was around 45. And now it's accelerating lower. We're around recently we're around 10. It must have gone back up a little bit because of gold going down, but I still think we're going to go to at least 1 to 1. And then I think it would be a good time to take some of your gold and exchange it for investments. Other than gold or miners. But I think that will take maybe 2 or 3 years still that for that ratio to go near 1. I mean, I've been involved in gold and silver since 2002, and there's been many of these corrections. And yes, get used to it. And it's one of the reasons so few people have gold because it seems like most of the financial commentators, economists, and the mainstream media, they're anti-gold. So they scare people off. But I mean, for your viewers, if they look at the gold chart and put it on a monthly basis or even quarterly basis, the correction we've had in the last few days doesn't even show up. So yeah, and like you said, markets also don't go up in a straight line. They don't go down in a straight line. They would all stop and consolidate a bit. The question is, how long is it going to consolidate until it starts going up again? I can't tell you, but I have a feeling it's getting faster and faster. It's not going to take the 4 months that it took earlier this year from April to August. For it could be a lot less.
Mario Innecco emphasizes that gold and silver remain crucial assets for preserving wealth amid ongoing financial instability. He predicts the Dow to gold ratio will eventually fall near 1, marking a point when investors might shift from gold to undervalued assets. Gold continues to serve as protection against inflation and monetary mismanagement, while silver combines industrial strength with monetary stability, making both metals essential in uncertain times. Could this global shift toward tangible assets mark the beginning of a new monetary era shaped by precious metals? According to Innecco, mining stocks remain undervalued despite volatility and are likely to gain as earnings strengthen and commodity prices rise. Ongoing silver, shortages, tightening markets, and declining confidence in fiat currencies are fueling investor demand for real assets. If you found this information valuable, make sure to like, comment, and subscribe, and turn on notifications to stay updated with the latest insights.